May-June 2018, paper number 11. We are doing in the reverse order. Okay. Why does a business prepare budget? We prepare budget so that we coordinate with business activities. Making a budget is not necessary as per any IAS. We prepare budget to motivate the management. So the answer is A, 1 and 3. Which cost follows this pattern? If you see over here, as the level of activity is increasing, the total cost is increasing. Administrator salary is a fixed cost, so it cannot have this pattern. Depreciation is also fixed cost, not this pattern. Rent is also fixed cost, not this pattern. So this pattern happens with variable costs. As the output increases, the total variable cost increases. So this pattern could be commission to sales. Are you with me?
Yeah.
Come on, let's do the 28th one. What is the effect on the break-even point? Selling price is 100, variable cost per unit is 40, fixed cost is 21,600, break-even point is 360. If business changes its production method, contribution will increase by 10%. So what is your old contribution, 60 per unit? Yes?
Yeah.
If I change my production method, my new contribution will increase by 10%, it will become 66. Yes?
Yeah.
Fixed cost will increase by 5%. What will be the new fixed cost? The new fixed cost will be 22,680. Are you with me?
Yeah.
What would be the new break-even point?
This fixed cost upon PV ratio, no?
Break-even point. I'm telling you the 6th time now.
Upon contribution per unit.
Fixed cost upon contribution per unit will give me my break-even point
In units.
in units. If I want the break-even point in dollar value, what will I do?
I'll do upon PV ratio.
Okay, fine. Upon PV ratio. So my new contribution per unit, my new break-even point is how much? 22,680 divided by 66. So it is 344 units. What was my old break-even point?
360.
So what is the effect on the break-even points?
Decrease by 16 units.
It is going to decrease by 16 units. Okay.
Yeah.
What is the contribution to sales ratio? I need the contribution upon sales into 100. Come on. I have fixed cost, I have break-even point. So if I have the break-even point in units, I know the formula for break-even point in units. What is it?
It is fixed cost upon contribution per unit.
What is the fixed cost?
12,000.
Per unit, I don't know. I know break-even.
So it will be 12,000 upon 1,500.
Okay, contribution per unit is 12,000 upon 1,500. It would be 8 per unit.
8 per unit.
Contribution is 8. No, I know sales minus variable cost gives me contribution. Contribution is 8. Variable cost is 12. What is the selling price? 20.
40%.
8 divided by 20 into 100, contribution to sales ratio is 40%. Let's go to the 26th one. What changes would result in decrease in margin of safety? What is the formula for margin of safety? Actual
Actual
sales
sales upon
minus
minus break per
break-even
unit.
sales.
Break even sales.
What would result in a decrease in margin of safety?
It will be D na increase and increase.
If the total fixed cost will increase, the break-even point will increase. If the break-even point will increase, that means the
Margin
margin
of safety will decrease.
will increase. आधा बच्चे को दिया. Okay. And by unit variable cost?
Because variable cost is a cost, and if a cost increases, so does the sales
If the
reduce.
cost will increase, so contribution per unit will decrease. If contribution per unit will decrease, the break-even point will increase. So increase and increase. So your safety will be in trouble when your cost increases.
Yeah.
Your safety will be in trouble when your cost increases. Come on. How is overhead absorption
Yeah, that's
in our
decreased. Yeah.
calculated? How do you calculate OAR?
By dividing budgeted overheads with budgeted machine hours.
Okay. Budgeted overhead by budgeted activity level. Fine. 24th. Which statement about marginal costing is correct? Marginal costing fixed overhead allowance not possible. Marginal cost represents the additional cost of making one extra unit. Correct. If inventory decreases, the profit under absorption costing will be lower than under marginal costing. Correct. So which statement about marginal costing is correct? 2 and 3 only.
What does the third one mean?
If your closing inventory will decrease, so profit under absorption costing will decrease.
Profit under absorption costing.
Okay. So this statement is correct. What is the cost per unit of closing inventory on 7th of March using APCO method? You have opening inventory of 20 items. You have sold 12 items. So 20 was at 7.5. You've sold 12 items, that also would be at 7.5. So I left with 8 items at 7.5. Yes?
Yep.
Then you purchase 18 inventory at 8.2. So what is the total number of inventory that you have?
36.
26.
Yeah, 26.
And what is the total cost? 7.5 plus 8.2. Your total cost
60.
is 15.7. 15.7 divided by 26. It is 0.60 per unit. Okay.
Miss, wait. You have to do SCA 18 into 8.82 and 26 into 15.7. No?
Hmm?
Don't you think we'll do 8 into 7.5 and 18 into 8.82?
Yeah, sorry. 8 into 7.5. It is 60. And 18 into 8.2. This is 147.6. What is the total cost? 147.6 plus 60, it is 207.6. 207.6 and 26 units. So per unit is 7.98.
So wait, I'll also do 8 into 7.5 plus 18 into 8.2. That is 8.82 or 8.2?
8.2.
7.98.
Hmm?
Yeah, 7.98.
Okay, come on. Let's do the 22nd one. Business employs 20 production staff. Each worker is employed 40 hours per week. Total wages for the week I want. 20 staff, 40 hours per week. In a week, how many days?
In a week, there are 7 days.
Huh?
7.
And what is the rate per hour?
Rate per hour is 7.8.
40 hours per week. So ये हो गया 40 hours per week. And rate 7.80 per hour. So this is the basic thing. 20 into 40 into 7.8. So 6240 is the basic wage. Piece rate is calculated 20% of basic pay rate per hour. For each product manufactured about 120 units per employee. Okay. In a week, each employee produce 145 units. Come on, calculate the piece rate. 25 units are
Percent.
extra. For these 25 units, you're going to pay them at 120%.
You mean to say 7.8 ka 20% for one extra unit, no?
Sorry?
20% of 7.8 or 120% of 7.8?
120% of 7.8. You can either take 20% and add to 7.8, or you can take 120% of 7.8. So for the extra units, you're going to pay them 9.36 per unit.
पर यहाँ पे तो लिखा है 20% of basic rate पे. It's not written 20
What
or.
we were giving, that we will give. Extra, we will give them 20%. What we were giving, that we will give. If they're producing extra, we will give extra 20%. If they produce normal, we will give them 100. If they produce extra, we will give them 120. Are you with me? Are you with me?
Yes.
Okay. So every worker is producing 25 units extra. So for those 25 units extra, we're going to pay them at 9.36. Yes?
Yeah.
And how many workers are there?
20.
20. So what is the extra thing? 9.36 into 25 into 20. So we are going to give 4680. This is extra for the piece rate. So the basic pay of everyone was how much? 6240. And for that extra pieces that they made, it is 4680. So what is the total wages? 10,920. Please go through this and tell me. Okay?
Yes, right. मिस 22 का आंसर ए दिखा रहा है, आंसर ए दिखा रहा है मिस में।
Is it?
या
What was the basic pay?
बेसिक पे मतलब 20 वर्कर्स का 20 का 6240, मतलब
No.
20 का 20 into 40 into 7.8 was 6240.
Yeah, it is it. You were correct. For the extra, you will not give them basic plus extra. You will give them only the extra.
मतलब 7.8 का 20%.
क्या हुआ? Piece rate, you
So
will give them 20% of the basic pay and a 20% of 7.8. You will give them 1.56. For extra units produced, so there were 25 extra units produced. And each
हाँ,
employee produced that, so into 20. So this is the piece rate.
तो
And this is the
31.2.
basic pay.
एक मिनट, पीस रेट वापस दिखाना कौन सा
Check, do it yourself. I'm waiting.
1.56 into 20.
The
Restaurant has the
following costs.
material.
What is indirect costs? Wages is direct. This is indirect. This is direct material. Rent is indirect. So what is indirect costs? Depreciation and rent. Okay. What would affect the current ratio of a business? Current ratio means something that is related to current assets and current liabilities. You purchase inventory by cash, inventory is increasing and cash is reducing. So,
No effect.
no effect. Purchase new machinery by check, so current asset is reducing. Receipt of cash from credit customer. So credit customer, that means trade receivable. That means current asset is reducing and current asset is increasing. Yes?
Yep.
No effect. Revaluation of non-current assets. Non-current asset is increasing and reserves is increasing. So even this will not have any effect. So only this will have an effect on the current ratio. Am I clear?
Yeah.
So we are done with the costing part of May June 2018 paper 11.
Yeah.